Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
We're going to check the score on some railroad companies reporting this earnings season with Eric Dutram, who is the editor of Zach's Surprise Trader. You're keeping tabs on about 4 different railroad companies here, right?
That's right, Terry.
Topping the list is?
We got Union Pacific first. And, the thing to note about railroads going into some of these numbers, so we had CSX report last week. Okay report. Coal's still going to remain an issue for a lot of these rail companies. But the space has a top 20 Zach's industry rank right now. So, expectations have definitely been coming down the last couple of months, but, maybe some of these companies might actually be able to beat because the bar is just so low that they'll have no choice but to clear the bar.
Interesting.
We can take a great look at Union Pacific over the last couple of years to see a perfect example of this trend. As we can see in the chart, over the last 5 years, we've seen a great move in the pricing consensus, strong move higher here over the last couple of years. But then over the last 18 months or so, we've seen a reversal, a lower pricing consensus here in 2015, and then the 2016 number has been pretty much awful here. We've seen a huge decline, and this is largely due to the negative impact of the commodity space and the impact this is having on railroad companies like Union Pacific. Unfortunately for Union Pacific, and they report on Thursday, they are Zach's rank 4 right now, and we haven't seen any lift in terms of the most recent estimates. We can see that in this chart with this 2016 consensus. It's still moving sharply lower. So it might not be as good of a report for Union Pacific, but there is some hope that maybe we are at least getting to the bottom with a lot of these railroad stocks right now.
And Thursday is April the 21st, right, I believe?
Think so.
Yep. Okay. Next we have?
Next we got Norfolk Southern. They're the next company report. They also are on Thursday as well. We're looking for 96 cents a share in earnings on this company. As we can see in the pricing consensus here, it's a similar situation to what we saw with Union Pacific, but much more volatile. We can see a 14 estimate, but then if you look at this 2015 and 2016, even sharper, and this is even worse than what we saw in the not so great. Another challenge for this railroad to sort of live up past expectations. We have seen recent estimates move a bit higher, so there's maybe a little bit more hope for NSC as opposed to UNP going into Thursday's numbers.
All right. And number 3?
We got a Canadian company, Canadian Pacific,
yeah.
is up next. This one's a bit more interesting. We can see that they're on a nice streak now in terms of earnings beats. The last 4 have surpassed expectations. This balances out against their previous 4 that were 4 straight misses. And an interesting thing to note about Canadian Pacific as opposed to the other 2 rail companies is we've seen a modest increase in the pricing consensus over the last couple months, in contrast to those other 2 that are either flat or kind of lower. This is also Zach's number 1 ranked stock, so it's a strong buy and a positive earnings ESP as well. You add both these factors together, and you have a pretty good chance for a beat. And this company report it is also in the Surprise Trader service, so we're definitely hoping for a beat on this one.
Yeah, Wednesday is the 20th of April.
Yes.
The list is Kansas City Southern.
That's right. Kansas City Southern is the last one I wanted to talk about today. Just another quick look here at some of the trends. It's kind of similar to the first 2 that we talked about, in that commodity impact is going to be a bit more severe, and analysts think that maybe the worst isn't quite over yet for Kansas City Southern. We can see the most recent estimates have all been lower. We haven't seen any estimates higher for either the current quarter or the current year. As we can see, the estimate trend has also been pretty negative for the current year and the current quarter as well. 90 days ago we were at $1.12 in EPS, and now we're just at 96 cents. So a sharply negative outlook here. The one saving grace here is that the most recent estimates have been higher. We're at 97 cents for the most accurate, but unfortunately, the next quarter we lose that cent, and the current year is also a bit lower as well. So it's possible that a company like Kansas City Southern they could beat, but their guidance might be a little weak. So it could be kind of a question mark there. Basically, it's an interesting space, but these kind of companies, these bigger ones that are reporting this week, kind of a mixed bag. CP looks to be a little better than most, and Union Pacific with its Zach's rank sell could be one to avoid for investors.
So the sector in general, if you had to call it, you'd call it mixed?
Mixed, but I think for a lot of companies, the expectations are low enough that we could see some decent beats, or at least meets. And I think a lot of investors might think that the worst is over for this space. Overall, it does have that top 20% industry rank. It's just some of these larger cap companies aren't really looking as great.
All right, thanks for that. There's more information on earnings on our website, zacks.com, don't forget. If you're not there already watching this video, get on over. All able to be linked to right off the homepage. With Eric, I'm Terry Ruffalo.